Later on this week, we'll see a number of releases that could affect the markets, including both the Bank of England and European Central Bank rate decisions. Today, my guest, Mike Hamilton, owner of TradeTheEasyWay.com, a company set up to mentor traders through to a professional level, is looking at three pairs: the pound dollar, the pound Aussie and the dollar yen. Hello, I'm Thomas Taplin and welcome to Targets in Focus. Good afternoon, Mike. Let's start by looking at the forecast for the cable over the coming months. What effect do you think the upcoming BOE figures will have on this pair, and do you think anything is likely to affect it?
Yeah, the Bank of England, Mervyn King, has been very gloomy in recent reports, but what I've been making a note of is a few aspects of data that's been filtering through from the pound. We've had, in the first half of 2012, business investment up 15%. From 2005 to 2010, we've had infrastructure expenditure at 113 billion. And the next 5-year period is expected to double, or more than double, to 250 billion. We've had retail sales up and jobs up, but obviously our GDP is lagging. The last figure that came in was minus 0.3. So I'm expecting, although Mervyn King and the Bank of England are gloomy at this stage, I think the underlying trend, the underlying data that's coming through is supporting a better second half for 2012.
OK, what about the pound Aussie? You've said previously it's one of the best looking charts this year. Yesterday it experienced gains due to better than expected China PMI data. It looks as though it's going from strength to strength. How do you forecast this pair over the coming months?
I think the pound Aussie, like I said, the pound Aussie dollar for February to May, it was severely oversold down there at 146. And I called the low in the middle of Feb and traded that up to 160, just shy of the 162. I think the thing with the Aussie economy is that it has a severe property bubble, which it's grappling with at the moment. And under the current Labour government, they have seen quite a dramatic increase in public spending. I think, obviously, with the exposure to China and the link to the gold, I think the pound versus the Aussie dollar will fare very well. And I think if we see the 50-point drop in Aussie base rates and continued stabilisation in UK rates, I would expect the lows down here to get bought on the pound Aussie dollar and to start to see that move up this week.
Mike, the tank and large manufacturers and non-manufacturers index, which came out yesterday, came in at -1 and 8, beating the Bank of Japan's expectations. The Japanese yen rallied as a result, but the BOJ wants to depress the yen, doesn't it? It
certainly does. It's extremely worried about the strength in the yen, and I've been long of the US dollar yen at various stages over recent months and weeks and days. It's a concern. My predictions for the Aussie yen were just for greater strength at this stage. I think a lot of the market was expecting us to be closer to 84, at least 82, 83 at this stage. So I think, the Bank of Japan have threatened intervention several times over recent months. I think we might be getting close to seeing that if we see maintained strength. The construction figures from Japan after the earthquake have been a big boon to the Japanese economy. So this is a real thorn in the side for Bank of Japan. So I think we could be stepping close to intervention here soon. And so looking for the US dollar yen to close above 80 in the next day or two, and to see further move upwards in the coming days and weeks.
Thanks for that analysis, Mike. That's all for the time being here on Targets in Focus. Check back for the latest updates and interviews though, but for now, goodbye.